Okay, GMGM friends, how are we doing today? I believe you're okay and you're doing very well. Okay, so in this video, we'll be discussing the introductory aspects of Forex, going deep into the terminologies and the jargons used in the Forex exchange, that is foreign exchange, that is the full meaning of Forex. Okay, so without wasting much time, let's see how far we can get in this video. So we start from the very beginning, which is what is Forex. Okay, so as many have heard the word Forex, foreign exchange, this and that, many might not even know what it means, but they've heard it. Okay, so this video will be going over everything it means and the terms and jargons and terminologies, whatever word you might want to call it, that is very necessary to know while trading the financial markets, Forex. Okay, so what is Forex? As I asked before. Okay, so they said Forex is a foreign exchange and it's a global market where the value of currencies are traded. Okay, this is basically currencies of two countries, let's say US now and Canada. You get so both of them use dollars. You get so the US dollars is traded against the Canadian dollars as a base and ask price as a bid and ask price. Okay, so I said Forex is the biggest market in the world with over 6 trillion daily turnover. Okay, so from current research, it's been noted that it's now 7 trillion daily turnover. Okay, that's how big the Forex market is. It's way bigger than even the stock market and the crypto market. Okay, so this is why it is not easily influenced by these hedge funds and industries and this. It's easier to influence crypto coins, cryptocurrencies because of it's individuals that are pushing money to create volume. But here, it's not easy to influence the forex market, which is one of the reasons why I actually prefer trading forex to crypto. Okay, so the forex market are actually traded by a few or by a large variety of people, which can range from the banks, the hedge funds, the industries, and then the retail traders. Now, the retail traders now are you and I, us now that now use our little money to trade the market, while the hedge funds and industries are people that are pushing billions daily into this same market. Okay, so market timing. Now, forex market are open 24 hours daily, 5 days weekly, which is Monday, Tuesday, Wednesday, Thursday, Friday. That is the only time the forex market is open, and it closes on the weekend. So beyond Friday 10 p.m. it closes, and then by Sunday, say 10 p.m. also or 11 p.m. Nigerian time, it opens. Okay, so there are trading sessions. Okay, I don't know, maybe it might have their word for it. Well, this is basically the London session, the Asia session, the New York session, and the Sydney session, or most people call it Tokyo. Okay, so and the timings are from 8 to 5, which is the London session, and the New York session is 4. And the Asia session is by 11 p.m. to 8 a.m., which by that time most persons will be sleeping. Okay, so market terminologies. What are those terms that we use in Forex? You get what are those things that when we say it, we communicate within each other in a term that only us can understand. A layman might not understand it. Okay, so there we have pips, we have long. This long can also be called bullish, while short can also be called bearish. Okay, so pips is formula of percentage and profits. We'll get to it furthermore in the video where we'll explain what the pips means in full. Okay, so we say confluence. Now what are confluence? Now confluence are reasons why we enter a trade. Okay, so examples of this confluence are just like You have the brick of structure, you have your engagement, you have your entry, certain things that gives you a conviction that you react from. It says this market is going so and so way. Okay, so we have the liquidity. So basically, liquidity is just orders in the market. You get positions where people set buyers or sellers in the market where the market comes to validate what it moves in its direction. Okay, so retracement can also be called a pullback. Okay, so it's a pullback in the overall trend in the market. Believe me, we will look at these things in the technical analysis bit by bit so you can understand very much well these terms that we're talking about now. Okay, so what we trade and how we trade them. Okay, so in the market we trade currencies. As I've said before, currency pairs of different countries. That's what we trade. And a currency pair is just a crossover of two currencies that allows us to buy or sell one against another. That's basically what it is. You can see from the video now that there is an euro and US dollars. That's basically what it is. One is a bid and one is an ask price. So that's what we trade. We trade currency pairs. But there are some varieties also. I trade synthetics. You can call it also derived derivatives and a few other indices, bonds, but that's not our focus here. Our focus here is currency pairs. Okay, so these currency pairs now buy and sell each other. The example that is also shown here, let's say we are on a buy position now. Let's say we are buying, so we're just essentially setting up orders for the price of euro to go up against the price of dollar. Yeah, that's for long trades, that is for bullish trades. And then for bearish trades, which is sell trades, is just for the value of euro to go below the value of dollars. So that's basically what it is in explanation. Yeah, so there are different types of currency pairs or categories, not types now. Um, there are categories. You can say that they can be categorized into majors, minors, and exotics. Okay, so there are certain pairs depending on which you prefer to trade that are major pairs and has the best trading price, the slimmest spreads or commissions, and then they can also have very nice structure, easier to understand. And some of these major pairs are Euro USD, USD JPY, GBP USD, USD CHF, and a few others that might not be included here, but we'll get into it later on in the video. So now we'll talk about the minors. The minors as well as the majors, they have some similar characteristics, okay, but then the minors have slightly wider spreads and commissions on some pairs, and you can see the examples on the screen, Euro GBP and a few others added to it. They are actually about 14 or thereabouts. Okay, so now we're talking about pips. As I said before, pips is percentage in profits. Okay, and it's the fourth decimal in a given bid or ask price. Okay, so the other illustration below is how we calculate pips. So let's say, for example, this is Euro USD, and we are calculating it now. Let's say there is an addition of 1 pip to the number on the screen, 1.0448. Okay, so that's 1 pip addition to 8, 10 pips addition to 4, and 100 pips addition to the other 4. So basically, it's just decimals. If you remember in mathematics, you can be able to add these things now and it will sum up to something. Okay, so what is the pipette? The pipette is the fractional pip. It equals 1 over 10 of a pip. Okay, so basically, when a pipette counts 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it adds 1 to a pip. So we just say that a pipette is a fraction of the pip itself. So it has to accumulate to 10 before it adds 1 to the pip. Okay, so these pipettes can also be called micro pips. Depends on whichever word you feel it's very much okay for you to use. Alright, so there are different trading styles. That's what we're discussing now. Okay. Long term and short term. Personally, I'm a day trader, and sometimes I scalp. I'm a day trader mostly, and then I scalp at some point. Okay, so what are these examples now? We have four types of styles. We have four styles of trading, which is the scalping, the day trading, the swing trading, and the position trading. Okay, so the scalp trading now is just when a trader trades in very limited or very short time, get using time frames 1 minute to a few seconds, at most 5 minutes, in order to make his analysis and entry in the market. So that's just basically what scalp trading is. It's just a quick in and out, and then you're done. Okay. So, but day trading now it's also short term, but then the traders look to trade within a few hours of the day, like 12 hours, 18 hours, depending on how long the trade takes to play out. Okay, so the time frame they usually use is 4 hours. Personally, I use 4 hours for higher time frame. Then I find my entry in 30 minutes or 1 hour. That is what I usually do in day trading. Okay, now swing trading. Now, what is swing trading now? Swing trading is more like a long-term hold where traders look to exit or and enter a trade within days, weeks, and months. Okay, so this is mainly for high capital traders. I don't swing trade. Okay, so they use the time frames for hours, daily, weekly. Most persons use monthly, where you can just enter the market and forget about it, and then check on it a few days and see how far they have gone, how their progress is. Okay, so position trading also is a long-term game. Okay, it's a long-term style of trading where they hold their trades a long time. Now, these position trades are mainly done by banks and institutions, and the time frame is basically used is the weekly and the monthly time frame. Most personalized just position trading now. They can also use the yearly time frame. It depends on which the trader is using. All right, so at this juncture, we have come to the end of our introduction and the terms and jargons, okay, for the introductory aspects of forex trading. So in the next video, we'll be going into something more detailed, something more sophisticated, okay. So, and I believe if you stick with this video now and then learn what it is a few more times, okay, you will be able to understand exactly what we've said now. And in order to perfect your skill, you need more practice. Okay, so just stay tuned. We'll go over the video again, go on your phone and make more research. And with time now, you'll get good at it. Alright, so at this juncture, we're rounding up and we hope to see you in the next video. Peace.